so that you'll be able then to view then what I'm doing on my side and follow then along. And I do appreciate the fact that then you do the calculations on your side. I think it really makes us then guys then to have then this online session, knowing that there are people then who are working then with us. So let's keep on then that spirit and doing that. Then on chapter 13, what we have done then so far, we did have a look on the method, the four method that we use then to allocate the joint cost then to the main products. That's what then we've done then up to now. And we will move on then today and see if then what if then it happens that in our production we've got the joint cost as well. How are we going to do? What's going to be the situation? What changes are we going to see? And what we need then to put in our heads is that the four methods that we've talked about, that is your physical units method, then your net, your sales value at split off method, your net realizable value method, and constant gross method. Those are the methods that we use to allocate joint cost to main products only. You cannot use any of those methods if it happens that in a question you've got a combination of a main product and a byproduct. So today we're going to look at that situation more. Okay, if then we've got that case, what are we going to do? So that's what we are going to go through in our today's sessions. Hence, we're looking at the methods to account for byproducts. So we've got two methods. So in addition to the six, mean that to the four that we've already have. So it's simply then if we've got a byproduct, the company take a decision between then allocating then the joint cost to the byproduct or not to allocate each joint cost and to a byproduct. So that's a decision that the company has to take. So they can decide, okay, in our company, we are not going to allocate any joint cost to the byproduct. So in that case, it means that we will treat as if then we don't have the byproduct and we focus on our main product. But if we decide then to allocate each joint cost to a byproduct, that's what we're going to look at. Okay, now how are we going to do our reporting if then we decided to allocate then the joint cost to the main product? Taking us then back a little bit, looking then at the picture then that we've used again, and say then this is then the product that we have. Then whatever amount then that you purchase this with, then we give it a name and say this is what we call it then the joint cost. And out of then this joint cost, you are going to have then these main products then that you are going to produce. These are your main products then that you are going to have out of then that one ship. But then, as we get on once and you slaughter then your product, then we come then to understand, okay, in fact, we've got then the byproducts here. There's your smiley then and also then amanqina there. You can't just say, okay, we don't need then this one, we're going to throw them away. But we give it a name and say that these are our byproduct, and we'll come up then with a selling price. Okay, let's have then the selling price. So hence then we are saying here now the company has got a choice here. They can decide and say, okay, because anyway, our focus was not then on Usmaili, then we are not going to allocate any joint cost, that is your production cost, and then to this product. Or else we say, no, let's do it because we generate income now with also this byproduct, which is what we're going to look at. So that's a decision, then that's how then the byproduct then arise, as we did mention then earlier than when we started in this chapter. So this is another situation. So joint cost not allocated to a byproduct. So what are we going then to do with the revenue that we've generated from the byproduct? So the revenue or the net revenue from the sale of a byproduct is listed on the income statement or your statement of financial performance as one of the following. So you've got the four choices that you can use, and then to use that income that generated from the byproduct as an additional sales revenue, other income, a deduction from joint cost of the joint product, or a deduction then from the cost of sales of the main product or joint product. So those are the options and that you can do. You can treat then that income that you generated from your byproduct. If then we decided not to allocate any joint cost to our byproduct. So this is an example then as it appears then in the textbook. I think this example appears on page 331 in the third edition. So in this case, you could see there you've got your main product and a byproduct. Given at the sales, 5,000 units at 10 Rand each, 500 units or in your byproduct at 1 Rand each. Production cost per unit, 7 Rands. Closing inventory, 1,000 units in your main product, nothing in a byproduct. Production units, 6,000 and or 500 units. Marketing and administration cost, 11% then in your main product. So the requirement was to determine the net profit for the company using the four options to treat then the revenue from the sales of the byproduct as described then above. So I've just taken it then from the books because then in the previous slide we've got the description on how to treat the income generated from the byproduct. So we're going to have a look at that. But how are we going to do then our reporting if then we've got such. So let's look then at that. So we look at option 1. Sales. So then in your sales, then you take then the sales of your main product. Given then in a question, if you can go back and look at the example, you've got then your sales there. Okay, this is our sales, 5,000 units at what? 10 Rand. 5,000 times 10. And that's going to give us what?
$50,000, sir.
Thank you. Then that's your 50,000 from your main product. Remember then the first then a scenario then or option that we have if we decided not to allocate then at this joint cost in the main product. They say that the income or the net revenue from the byproduct, then we are going to treat it as an additional sales revenue. So that's what then we're going to focus on. Using then this income from the byproduct as additional sales revenue. So it means then here you are going to simply say plus then your byproduct sales. Which then when you go and check then our byproduct sales, there it is. You've got 500 times 1 Rand. So that's the 500 by 1, then it gives us 500 Rand. So this is our option 1. So it means then your total sales will be 50,500. Then I will say then after that minus the cost of sales. Then to work out then our cost of sales, because then they are not given enough for us, we will take then the production. So let's look at our production in this question. So we've got production cost per unit, then given for 7 rand, that's the cost. Then our production units is 6,000. So that means that it's going to be 6,000 times 7 rands. So 6,000 times 7 rands.
42,000.
Thank you. 42,000. Then from there, then we say minus, because we didn't have the opening, so minus closing. Closing inventory is given again in the question. Excuse me. So we've got to have then the closing in terms of the units given here, then 1,000 units. There is the 1,000 units given for us. So we take then at heart. Times 7, then obviously that's going to give you 7,000. Then according to the first method, so your cost of sales is going to be 42,000 minus 7,000. Then you've got what?
35,000.
And it gives you 35,000. That's your cost of sales. And your gross profit, 50,500 minus 35,000. That is your total sales of 50 minus 35. Then it gives you
15,500.
Thank you, 15,500. Then you say minus your other expenses. The other expenses then that we have then here is your marketing and admin of 11% of his sales. That's the other expenses that we have. So it's 11% of then the sales, which is going to be how much? There is our total sales, because we're looking at a rand amount here.
5,500.
It is 5,500, because then you taken 50,500. Then you times then 11%. Now we go back then to the original sales, guys. I'm making a mistake, so we don't take then the total sales, because this is just an additional figure. So you go back to the original one, which is then your 50,000. So 50,000 by the 11% gives you then that 5,500. That's your total expenses, 5,500. And you've got your profit. 15,500 minus 5,500. So it's going to be 10,000. So that's the first treatment. If then they say let's treat it as an additional sales, then the income from the byproduct. So that's how then you are going to do your reporting. But look then at the second one. They say then you have to treat it as other income. So the income then that you've generated from the byproduct, you are going to treat it as other income, that amount. So let's just quickly show them how are we going to present now then our income statement. So option 2, again then I will have then 50,000. But now we're not going to have then this one. So our total sales again will remain at 50,000. Then you've got your cost of sales. I won't redo the calculation because again then there's nothing going to change. Your production again you have then the 42,000 minus 7,000. Then it gives us 35,000. Then you've got then the gross amount of 15,000. Now we're supposed to have a space here again, guys, plus then the other income. Let me quickly do this. Sorry for that. Other income. Then your expenses, which is then your marketing and admin. We have then of 5,500. 500. We don't have other income under option 1. 10,000 was our profit. Option 2, then we do have then other income, which is going to be your byproduct income. So then that 500 will go there as your other income. Where because of then the space, I want to have the space in to have a total, then a marketing and expenses, 5,500. 5,500 will come here. So you've got 15,500 minus 5,500. That's going to give you again then the profit of 10,000 rands on that second option. So that's what you do. Then you add it as an other income. Now that in that amount. I hope then that one is clear as well. Look then at the third option. Third option is as a deduction from the joint cost of the joint product. That's what then I will do then as a deduction from the joint cost. So we go then and look at option 3. Once again, you've got the sales of 50,000. No byproducts and sales because that was first option. Again, it gives you then the 50,000 as your total sales. Minus then your cost of sales. That's what you have then to recalculate. Now that they say that, guys, then we are using then this income from the byproduct as a deduction from the joint cost. of the byproduct. Looking at then our question, how much then is our joint cost here? We do know that our joint cost is equal to 42,000, right? We've got then the 42,000, which is 6,000 times 7. So from that 42,000, they say now let's minus or let's use the income that we've generated from a byproduct to reduce then that amount. So that takes us then to our adjusted joint cost now of to 41,500. Are you with me? So we've got that now, 41,500. That's what then we are going to do here. Say 41,500 when we do then in your income statement. Now minus then your closing. It was easy then before then to work out then that 7. It was 1,000 rands times then 7. Now that then we've adjusted then our joint cost, we need then to revise the cost per unit. Because then it was 7 rand and the total cost was 42,000. But now that then the revised or adjusted joint cost is 41,500. How much is our new cost then per unit? So you will take 41,500. So we will take then the 41,500 and we divide it by the number of units, our production. Our production is 6,000 units, right? So if you take 41,000 divided by 6,000 units, then that's going to give you what? What will be our new cost per unit?
69 rand 1,16.
6 rand 90 what?
69,16.
No ways, guys. Remember, no, previous then our cost per unit was 7 rand.
6 rand, 97 cents.
Why I'm tempted then to say 6 rand 92 cents.
92 years.
So then that's going to be our new cost per unit. Because we've adjusted the total amount by 500, then it automatically adjusts then the cost per unit by then that 0.8 cents. So that's our new cost then per unit. So with that cost per unit, then we multiply by the number of units. So instead of multiplying here by 7, we are going to multiply by 6 rand 91. Then it gives you 6 rand 92. I'm sorry. Why I say 91? So 1,000 rand times 6 rand 92 cents.
6,920.
6,000
920.
920. Then I will say now 41,500 minus of 6,920 to get your new cost per unit. I mean, our new cost per se.
$34,580.
Thank you. Then 50,000 minus 34,580.
34,508.
Thank you. That's our cost of sales. Then we take 50,000. That is our sales minus 34,580.
15,420.
15,420. That's good. Now, once again, we don't have any other income because we've already used then the income from the byproduct to adjust the joint cost. Then we come then to the expenses. Again, then we're not going to change. It's going to be 5,500. 5,500. So 15,420 minus 5,500.
$9,920.
9,920. Thank you. So that's how then it's going to look like. Then under option 3. Then we've got the last option where they say now we can use the income that we've generated from the byproduct as a deduction from the cost of sales of the joint cost. Now, when we talk of then the cost of sales, you need then to remember this cost of sales is a period cost. That means then the amount we are going to adjust to the cost of sales of this particular period. Unlike then in the third option where it was a deduction from the joint cost, that also affected the closing working process. Look at that last option. 50,000 again is going to be sales. Then you don't have then the byproduct as an additional sales. Therefore, we'll have then that 50,000 as our sales. Minus then the cost of sales, we will look at that. So they said our production again then is 42,000. If you take 6,000 by 7, but now we are using the byproduct income then as the deductions then are from this cost of sales. So minus the byproduct income, which is 500. Then I will have then 7,000 as our closing. Why did I say 70,000 here? So that's how then it's going to look like then in this the last option, our calculation of the cost of sales is going to be 42,000 minus 500 because we're using then the income from the byproduct as an adjustment or a deduction in the cost of sales. 42,000 minus 500 minus 7,000. Then your cost of sales then will be
34,500.
34,500, 50,000 minus 34,500. Got a gross profit of
15,500.
15,500. No other income. We've got the marketing, which is 5,500. 5,500. We don't change that. That gives you 10,000. So those are the 4 options that we have. Then if we decided not to allocate the joint cost in the byproduct, as you can see here, then we didn't talk anything then about the share that will go then to the byproduct. So that's what then we have to do then if then we've got that. So this example then assisted us then to say that. But then what if then as a company then we decided that look, we were happy then to allocate the joint cost then to a byproduct. Again, then they developed two methods then that we can explore. The first one they call it replacement cost method, and the second one is a reversal cost method. So those are the two methods then that we can make use of. Now looking at the replacement cost method, it's where byproducts are used in the production plant, avoiding the purchase of a certain materials from outside. So the value assigned to the byproduct is the purchase or replacement cost. So in a actual sense, then when we talk of a replacement method, then in calculation you won't see anything much, but it's a matter of reporting. It's a matter of just doing the documentation, and then that's all. So hence then we are not going then to consider that then when we do our calculations. But when we look then at the reversal cost method, then that's where then we'll have some calculations on it. Because they say the manufacturing cost of joint products are reduced by an estimate of the byproduct's value at split off point. So that's what we're doing. So it's more or less then the third method. If you check then the third method, if we decide not to allocate, because even in this case, before we can allocate the joint cost to the main product, you'll first then dispose then your byproduct. So how are you going to do that? You apply this reversal cost method, where then we adjust our joint cost that is going to be allocated to the main product by an estimate of the byproduct's value at split off point. So then to work out then to this byproduct estimate value at split off point, this is what you have to do. You take then the sales of then your byproduct minus then the gross profit. So at times in some of the question you are going to be given a percentage. You deduct then that gross profit minus any further processing cost and any other cost that you have. So these are the four sets of the cost then that you may expect then to deduct in order to arrive to the estimated income at split off point. It's not a must that all these costs has to be there. Sometimes then you'll find that you don't have a particular cost and that's it. Then you are not going to create it. So, but you'll use, if then you don't have all then at this cost, it will mean that the sale of your byproduct is your estimated income at split off point. So that's how it works. So that's what we have then to do. Then there is a question 13.4. If you look at your textbook, then I think it's on page 335. So I've taken then this question so that we can make use of it. And what I like about this question, it gives us a more revision because it takes us back again then to the method that we've already talked about. Then again, then it also incorporates the byproduct in our calculation. So this is a quite good question that we're going to have a look at it. So it's MPTY Limited manufactures two material M and T. So that's your main products that are used in the manufacturing of bottles. M and T are processed further to meet the quality standard that is set for the bottles. The following information is available then for April. Total sales at split off point, we've given 1,800,000 and 1,500,000. Sales units is 9,000 and 10,000 on the other side. Opening inventory units is 800, 1,200. Closing inventory units is 1,000 and 2,000. Joint cost, we've got a total of 3 million. So we don't know how much will go to M and how much will go to T. Further processing cost, 450,000 and 550,000. We don't have a question about that because as you've seen, then we said that the further processing cost is after then the split off, where then you've managed then to identify or to separate then your products. Then they further gave you the explanation. The joint costs were allocated on the basis of market value at split off point. So that's a method that was used before. Management, after consultation with financial reporting experts, decided that the joint cost should be allocated on the basis of the net realizable value as required by International Accounting Standards number 2. M is sold at 250 per unit and T 300 rands per unit after they have undergone an additional production process after the split off point. Question continues. Management has recently found a market for a byproduct from the joint process, which they gave it the name as BOT. During April, the sales of BOT amounted to 200,000. BOT needs additional manufacturing to be resellable, and this process will cost 100,000. Require. Ignore the byproduct information. So it means that you'll take as if this statement above doesn't exist at all. If the joint costs are located on the basis of the market value at split off point, or in other words, sales value at split off point, what would the joint cost allocated to M and T be? So I will look at this question then at 13.4. Method that we're using here is sales is sales then at the split off point. Right, we do know that the column, we said that we've got a product, units, selling price. So estimated sales, of course, then is a selling price at split off point. Estimated sales, joint cost. You've got product M. It's M and what? We've got product M and T. Then the question is now, then we're looking at the units. Go back then to the question. So we're looking at the units. Remember then what I've said then to you guys then is that we do not make use of the sales. One I could jump and say that, okay, why then are we waste our time? Because here then we've already given the total sales a split off point. So why then are we keep on wasting then our time by looking at the units? Is because the column said so. Oh, no need. But if you look at then at this total sales is based on how many units sold? 9,000 units here and 10,000 on product T. And you've got a closing of 1,000, you had an opening of 800. So we said that then our estimated sales are based on the production, not on the units sold. So you need then to calculate then the production. Looking at the question, then you don't have then the production. Production is not given here. So you have then to work then for a production on your own. So we need then to work then for that production on our own. So we do then a little bit of calculation. M and T for the units produced. So look at the opening plus then the production that will give you the units available minus, then you say you minus then the closing.
Sorry, sir.
Yes.
Before we can proceed, sir, based on the opening units, sir, as you said, we have opening units here, sir. Are those
Yeah.
units for the last period, right?
Are we?
Are those units are those units for opening? Are the last units for the previous year, right, sir?
Yes, that's correct.
So
They were
why should you include them here on this current year, sir? Because those units for opening were calculated for the last period.
I'm 100% then with you. That is why then I'm saying then to you to calculate our estimated sales, we must calculate it then based on the production, the current production, not on the actual sales. Hence, then I'm saying then to you that we cannot then now be tempted then to take 1,800,000 because 1,800,000 is our actual sales, which then include then 800 units which were produced last year, plus then whatever then that we produce currently, to make us then to have 4,000 units as a closing. Hence, then I'm saying then to be correct with our calculation, we need then to go back and work out, okay, how many units produced in this current period, that is in this month of April.
Sir, as you are saying, we need to calculate according to the current production. Our current production should be the units that we have produced this year, right?
I'm with you.
So why then don't we put those opening units aside, sir? Because those units we were calculated last year.
So how are we going then to do that? So in your suggestion, you were saying that we suppose then, because if you look at the question, the current production is not given then for us. So what is given then is the opening, sales units, closing units. So the table then that I'm showing here now is to assist us to work out, okay, now how many units we produced, so that we can go on and with our units produced.
Let's get on, sir.
Okay, now I hope then you'll understand as we move on. So we've got 800 here in the opening. On M, when we look then to product T, then the opening units is 1,200. Under the normal circumstances, we were supposed to say plus production to arrive then to the units available, but we don't know the production. That is why then we embark then to this exercise. But we do know then at the closing, but the closing here is 1,000 units. Then on product T, the closing working process is 2,000 units. That we do know. Then that was going to give us our sales. That was going to give us then the 9,000. And then on product T, then the sales units. 10,000 units. Are you with me? So now we see them, okay, we can't have then the units available then on both sides because we don't know the production. Then we do know then at the closing work in process or the closing units. Then we also know then at the sales, but the sales is 9,000 on M, the sales is 10,000 on T. So we are going then to work here, guys, then from bottom up. That's then the option then that, or the only option then that we have. So we've got this sales then is 9,000. So we know that these sales to arrive then to this 9,000 is the units available minus 1,000 units. Then it gives us 9,000. So we add back then at the closing to our sales. Then to arrive then to our units available. Does that make sense? I hope so. It's because we're working now from bottom up.
You know, please say.
What I'm saying then, as we said, then we're working then from bottom up. You've got your sales of 9,000. So it means then before you've taken whatever units that you have then here as your units available. So you've said units available minus 1,000 units. And your answer then became 9,000 units. But now they've hidden for you the units available here. So how are you going to get then that units available? Because you know that, okay, how did I get then to the 9,000 was by taking then whatever that was available and minus then the closing. Then I've gotten my sales of 9,000. So I'm going to add back now 1,000 or a closing to e-sales. So then to say that, okay, therefore the units available now here is 10,000 units. If you can test now is you can say 10,000 minus 1,000 units, then it gives you 9,000. And also then at this side, then I will say, okay, it means that then our units available was sitting at 12,000 units. So that then we can be able to say 12,000 units minus 2,000 units, then it gives us 10,000 units as our sales. Does that make sense now? I hope so. So you do know then your opening. Now you know then your units available. Under the normal circumstances, then to arrive to the units available is by taking the opening units plus the production. Then it gives us the units available. But now we don't know then the production. So we do know opening and the units available. Now we do know that. So we can quickly work out then the production. It means then how many units? Because we know that to get then to this 10,000 is by taking 800 plus what we don't know at the moment. Then it gives you 10,000. So the production here then is equal to how many units on M?
9,200.
9,200. That's correct. Then I come in then at an OT.
It's 10,800.
10,800. Then now you've got them. This is what we're looking for. So you say now 800 by 9,200 then gives you 10,000. 10,000 minus 1,000, then you've got a sales of 9,000. Now going back then to that question that you asked then earlier on, then talker of saying that why then you want us then to see the units that we're going to use exclude the opening. Now, can you see that now we are in a better position then to do that because we've managed then to focus or to work out the current production. So we're going to take then here 9,200 and 10,800. So these units has nothing then to do with what we've produced in the previous period. There is another question again, selling price at split off. How are we going to get to our selling price? Because again, the selling price is not given. I think I like them this exercise. How are we going to work out then the selling price? Anyone who can assist us looking at the question? Who can then now take then now the guess and for us, okay, this is what we can do then to calculate our selling price.
As on the statement there, we do have 250 for M's, right? Yeah. Yes.
Also, what you are saying then, let's not waste our time. Let's just take then for M 250 and for T take 300.
Yes, I think we'll multiply. We'll say 250 times sales units, which are 9,000. I think so.
Now I got to remember then we've already have then the sales units. We've calculated them using the production. We didn't use then the sales. But if then you think that is what we've done, you can prove it. Can you take 9,000 times 250 and see if it's going to give you 1,800,000?
No, sir.
So therefore, that suggests that 250 is not a correct selling price. Because remember, then here we're looking at selling price when? At split off point. And if you look at this statement, read this sentence. It says M is sold at 250 per unit and T at 300 per unit. There is a very important information. After they have undergone an additional production process, after the split off point. Take note of that. And the selling price that you are looking for is a selling price at split off point. So therefore, it means that 250 and 300 are your selling price after further process. So we can make use of that then at split off point. But what we have then, we do know what is the total value, what is the sales value at split off point for M and T is given for us. 1,800,000 is our sales value at split off point, and 1,500,000 is our sales value for product T at split off point. And then how many units then are we sold?
9,000.
9,000. Therefore, the selling price is 1,800,000 divided by 9,000. 1,500,000 divided by 10,000.
200.
Then here it gives you 200. Then coming then to product T is going to give you, it's what, 150?
It's 150, sir.
That's how then we calculate then the selling price. Because remember, guys, the selling price then has nothing then to do with the volume, but whether then the units, irrespective of now in this case, because our sales units is 9,000. So the selling price is an independent value standing alone there. So we can't say now we are going to risk here because then we want then the selling price then that we're going to multiply then with the production. So we can't use this one. But the trick here then they've already calculated the sales value. So you just go back and find out, okay, what was the selling price per unit? So we do know the selling price now per unit, but okay, is 200 and 150. So then to work out on your estimated sales, you'll take 9,200. Now, can you see then we are not taking 9,000, but we're taking 9,200 because that's our production. Multiply it then by 200. Then it gives you How much?
1,840,000.
1,840,000. Then on product T, 10,800 by 150.
1,620,000.
1,620,000. Then these are the values then that we were looking for, guys. And in order to allocate a joint cost of, is it how much? Is it 3 million? Just go and check. Yes, it is 3 million. So we're looking then at these two values. So then we can add then the two and get the total. $1,840,000 plus 1,620,000.
3,460,000.
3,460,000. Thank you. Then you can do then your allocation as we do then 1,840,000. Then you divide that by a total of 3,460,000. Then you multiply that by 3 million. Saying that it's going to be 1,840,000. You divide by 3,460,000 times then this amount. Then how much will go then to product M?
$1,595,376.
Thank you. 1,595,376. And you can simply say minus to get the difference, minus 3 million. Then you get the share, and that will go then to who product T. The difference is how much? Oh, 1,620,000 divided by 3,460,000 times 3 million.
1,404,624.
1,404,624. Thank you. That's how then you've allocated. Then the joint cost using the sales value at split off point. Right, then we're done then with the first requirement in the question. Let's check then what is the second requirement. Second requirement, they say to you, ignore then once again the byproduct information. If the joint costs are allocated on the basis of the net realizable value, what will be the joint cost allocated to M and T? So we've done then the sales value split off point. Now we're moving on then to the net realizable value. Add split. Once then we talk of the net realizable value, it take you then to who after further process. So now we're looking at net realizable value method. Product and units, selling price. The selling price will be after now. Then again, your estimated sales, further cost. Then to arrive then at your net realizable value joint cost. We do know then our joint cost is sitting at 3 million. We've got product M and T, 9,200. We've already worked out then at the production, 10,800 times then the selling price. Now we go back then to those prices that we were talking about then at Toka. It's high time then to make use of then those selling prices, because these are the selling prices. Remember, after then these two products they've undergone then an additional production process after the split off point. So now you can safely multiply then by 250 and 300. So 9,200 by then now 250. Then it's going to give you how much?
2,300,000.
Thank you, 2,300,000. Then 10,800 times 300.
3,240,000.
Thank you, 3,240,000. Then minus further cost. We go and check then how much is our further cost. Back then to the question. So these are the further costs they are given then for us. 450,000 and 550,000. It's well known. And 550,000. So you take your 2,300,000 minus the 450,000.
$1,850,000.
1,850,000. Then again, 3,240,000 minus 550,000.
2,690,000.
2,690,000. Then we get then the total. So it's 1,850,000 plus 2,690,000. Then what will be the total, guys? 1,850,000 plus 2,690,000.
It's 4,540,000.
4,540,000.
Thank you, 4,540,000. Then we do then the same calculation. 1,850,000 divided by 4,540,000 times 3 million. Then it gives us what?
Um, 1,222,467.
1,222,000. You said
467.
467. Thank you. That's what I didn't hear then. So then the second one, you can minus and get the difference. I've calculated on my side. I've got 1,777,533. So that's it. That's how then you allocate then the joint cost using then the tool. So to speak, then this was just a revision of what we've done. Then we come then to the topic then of the day. Then when we look at our last requirement in the question, then when they say then the net proceeds of the byproduct are treated as a reduction of the joint cost. Determine the joint cost to be apportioned to M and T using the net realizable value as allocation base. So that's then what we're going to do. Now we have to take into account then the byproduct. You may remember then what I've said, guys, that if then you've got then the byproduct, you need then to write it off first. So that's what then we have then to do. So then we say they are saying then it is treated then the net proceeds of the byproduct is treated as a reduction of then the joint cost. So that tells us then okay, now this is the reversal method that we have then tend to make use then of. So then we're going to first work out then on those net proceeds of a byproduct. If you look then at the sentence above, said management has recently found a market for a byproduct from the joint process, which is bought. During April, the sales of bought amounted to 200,000. Bought needs additional manufacturing to be resellable, and this process will cost 100,000. Before then we move on then to this, let's go back then to what then a reversal method then I said is all about. We have then to do. Remember then this is what we've talked about when we come then to the reversal method. They say now we take the sales of the byproduct minus gross profit, minus further processing cost, minus then any other cost that we have. So looking then to this question, here then I look at the question, sorry. If we look then at this question, we do have then the amount 200,000, but then it needs an additional manufacturing then in order then for this product to be sellable, which will cost then 100,000. So this is then a further processing cost, if we may call it like that. So that's the only cost then that we have to arrive then to our net amount. So that's what then we have then to do in order then to do that calculation. So you've gotten this byproduct. Sorry then for that. I'm sorry guys, someone is trying then to call me, and that then makes us then to lose the connection. Minus then this further cost that we have, which is 100,000. Therefore, the net amount is 100,000. So we are going then to take then after that then our joint cost. Remember how much is our joint cost? 3 million. So minus then byproduct. I'm sorry then for that. My tablet then that I'm using then to write on it just now automatically switch itself off, guys. If what happened, I really don't know. Yeah, and by the looks of things, then we lost then all what we're doing. Nevertheless, I can say that there's a hand.
Sorry, sir.
Yes, I said.
Ngicela torho kukho umuntu emane remove emithingini apha. Ngicela torho ayiyeke le nto ayenzayo.
Please, let's try then to behave, guys. And I mean, we are adults here. Let's not then do those things. I let then your cameras and you all other options then to be active on your side, because I trusted that you are matured enough, you'll be able to behave in a class. So please, if there is someone who's doing that, let's not do that, please. I'm quickly trying then again to rejoin, guys. Just a second. We almost done. I know that our session today became a little bit longer. Sorry for that, but I'm sure that you'll agree that it's worth it. It's not that we're just staying here, but there was a benefit attached to that. Okay, thank you then for your patience, guys. I'm back. Let me try then to share again my screen. Okay, so at least now it looks like now we haven't lost much then on what we're doing then on this exercise. So let's look at the third one. So we've just done the calculation. If you still remember, that's what then we've lost. We said that we've got a sales of 200,000 minus then the further cost. It was 100,000. That gave us then the net amount of 100,000. Then after that, we taken then our joint cost. You won't know what's this. We adjusted at the joint cost. 3 million. We minus then at this net amount of 100,000. For our adjusted joint cost. $3 million then minus 100,000. So is 2,900,000. So this is then the new joint cost. So by doing this, guys, then we are just then now writing off the byproduct. So we've used then the income from the byproduct to adjust then our joint cost. And in the question here, if you go back and look then at the question, they say then we have to determine the joint cost to be apportioned then to M&T using the net realizable value method. So as I've said that you cannot apply then this method up until you've disposed then your byproduct first. So we've done that now. We're in a better position now then to do then that disposal. Let me do this. Oh, sorry. So this is the method then that we use. So then we can use this method, product, units, selling price. Remember then it's a net reasonable value method, so it's a selling price after. Then we've got estimated sales. Then from this estimated sales, then we've got further cost, net realizable value, then joint cost. M&T units, wait, it was 9,000 what? Let's go and check. 9,200 and 10,800. 250 and we've got 300. I'm just taking them from here as they are. There's nothing changed, guys. 2 million. And 3,240,000. 2,300,000. Then on product T is 3,240,000. We've got 450,000 as your further cost here. 550,000. Remember, we minus the further cost. It's advisable then to put them on the brackets. Then it gives us 1,850,000. Then on this side, then our answer was 2 million, 2,690,000. 2,690,000 with the grand total of 4,540,000. Then with the joint cost, remember now that's the difference. The only difference that we have then in this calculation, 2,900,000. So that's then our joint cost. I'm sorry, I can see then the messages. I think then these things then off then are removing others, and it's still happening. So please, guys, then let's not do those things. So then that's how then I will do then our allocation, guys. So let's do then the allocation. Then for M, 1,850,000 divide by 4,540,000 times 2,900,000.
Um, 1,181,718.
718, thank you. I'll just say minus here then from that to 2,900,000. And the share that will go then to product is 1,718,282. So then that's it, guys. So that's then the adjustment that you have then first do. If then you've got a byproduct, take then that income from that byproduct and use it then to reduce the joint cost before you make use then of any four or those four methods then to allocate the joint cost then to in main products. So that's what we are doing then if we've got a byproduct. So we only left then with one section then in this chapter. Very small section then that we're left with. We're going then to do that then on Wednesday. Then we finish then chapter 13. I know then this was a long then chapter then long session then today. Please, my apologies then for that to keep you then so long, but I appreciate then your stay, guys. Then we're going then to close it here for today. Meet then on Wednesday at 12 o'clock. Thank you so much. Let me stop the recording.